Hey, Tyler Casey here. This is episode 8 of the Ideas in Capital show, and we're here with Jeff Hill with Planet Home Lending. And we're going to talk a little bit about how his products match up for both homeowners and investors alike. They have lots of interesting and unique in-house products that fit what a lot of the audience and my clients would need for their investments. And I thought he'd be a great person to have on to teach you guys all about how lending products might match up with the investments that you're doing.
Well, I really appreciate you having us on the show, and looking forward to learning a little bit more about ProX and what we're doing here. But as far as with the lending products for investment real estate, whether you're looking to build into that portfolio on new construction-to-perm, or if you're looking to fix and flip, or if you're just a first-time investor and you're looking to just start out, we're kind of a one-stop shop. You know, we have a lot of different products as far as from the non-QM side all the way down to your FHA, where you can finance a 4-unit property. You live in one with as little as 3.5% down.
So before we dive into the details of all of the different things that you have to offer and how they might be a fit for real estate investors, let's just get to know you a little bit. So we already know each other, obviously.
Yep. Oh yeah.
We're golf buddies.
Yep.
And we've done a little traveling together and competing against each other in golf.
Coast to coast.
So before we start, why don't you tell everybody about how good you used to be at golf?
Yeah. I used to be better than you.
Well, you used to be like really good, like professional level golfer.
Yep. Played some mini tours. Tried making a living for 3.5 years traveling, but finally found a career path that actually pays the bills. So
yeah,
I think my wife is. Well, I'm pretty confident I wouldn't have my wife if I was still playing golf. I could barely feed myself, never mind her and our 8 kids.
That's a good point.
Yeah,
mini tour golf is not a lucrative endeavor. So is that why you gave up on golf? Was because you were getting married, or you were with Amy? And
no, so for me, I ran out of money. It was something that I tried to do on my own for 3.5 years, and I just got to a point where Visa and MasterCard wanted to get paid, and so it was time for me to hang it up and get into the golf business, which I transitioned into the retail side of golf.
Okay, so how did you do that? What were you doing? You were working at a golf shop, golf store? What were you?
Yep. So I was working with Edwin Watts, which national retailer, got bought by Worldwide Golf Shops. So I was assistant store manager in Ocala, the location here, and during that time, that's when I actually met my wife. About 2 years into that, and she had a great idea of we should go live in China for a couple of years. So we decided to do that. Came back after 2 years and had an opportunity to buy into a shop. And I had some partners in the golf business with Golf Central here in Ocala, and we grew the business model and had 2 stores, and then I was fortunate enough to take a buyout. In a short 2 years of that business, it paid me for the next 3 years to where I didn't really have to focus on making an income, but it allowed me the flexibility to get into what I do now, which is mortgage banking. And I think that's one of the biggest struggles with a lot of people starting on their own, whether they have families or spouses, bills. Being able to have that money coming in from the sale, but also being able to learn the mortgage business, and by the grace of God, got pretty good at it quick.
Well, being a mortgage broker is very similar to like being a real estate professional or being an entrepreneur, in that you you're not typically getting large fixed salaries. You're mostly on commission.
100% commission.
So you're really incentivized to get the deal done for people who are trying to buy a home or trying to do a real estate investment.
Yeah, and I mean, like anything in sales or in the service business, if it's easy to generate a good rapport and people to trust you by doing a good job. But as soon as if you don't, then that will follow you as well. So,
Sure.
I've really focused on making sure I understand the products before I start delivering it. I think that's one of the biggest things that, just doing the research and understanding the product before I say, hey, yeah, we can do this. Last thing you want is, nobody likes surprises in real estate, right?
Well, I want to know when I send my client somewhere that the deal's going to get done if the lender says it's going to get done at the beginning, right?
Yep, 100%.
It's pretty important.
Yep, yeah, because nobody gets paid if we drop the ball. Title companies, appraisers get paid, but title companies, both agents on both sides, that family that's looking to
So
sell
the appraisers and the home inspectors who screw up the deals are the ones who get paid no matter what, right?
They and I think that's why it's so important that you have trustworthy partners in both in the home inspection phase, but also with us in the lending side is having a correct panels put together for the appraisers. Now they're all independent contractors, they work for the state or they're self-employed, but we have a really good panel that rotates through our EMC to make sure that to mitigate those issues, and that's important.
Well, naturally, as a lender, as a broker, as a property manager, as an investor, you want a home. I'm sort of kidding, but you want a home inspector who will find real issues with the home, right? While giving you kind of a realistic, or the multifamily property, whatever it is you're buying, while also giving you a realistic outlook of what parts of what they note on the inspection are not that big of a deal or don't matter, right? You kind of want somebody who has that ability to communicate what matters to the clients.
Yeah, because everybody's buying for a different reason, right? Some of our clients don't have the money to make the repairs or changes after, but the lender, us being the lender, if that comes up on an inspection, or we see, or there's a repair that needs to be made, or the biggest thing is for insurance purposes, right? So the home can get insured at the time of closing. We really minimize the need for any inspections. I always tell our clients and our buyers, yeah, go ahead, get the full inspection, get soup to nuts, everything, so they have their peace of mind. But we don't require it unless it's with VA lending. We're going to need pest inspection, which is the only loan that requires that, and then a water test if it's on a well. FHA, water test on a well, USDA, but any of your conventional products, we're not going to require any home inspections. Just the appraisal.
So I really want to get into the nitty gritty of what kind of products that you guys offer, and what type of properties they fit best for and situations they fit best for. But I do want to backtrack first and talk about something else that I think is really cool and interesting about you and your wife and family. So just tell us a little bit about your family. You've got a very large and unique family.
So my wife and I, we have been involved in foster care since 2017. We have had 86 kids through our home through foster care, and we have adopted 6 of our 8 through foster care here in Marion County, and we're getting ready to finalize the adoptions for our other 2 that have been with us for 2 years. So have the most amazing kids in the world, the most organized wife in the world, that she keeps it all together. But from 5 years old to 13 years old, we have 4 girls and 4 boys, and it's a lot of fun.
I don't know how you guys do that. I have no kids, and I feel like I don't have enough time for everything. So
it's probably a good thing.
You think so? Yeah, we wouldn't want any more little Tylers running around in the world, would we?
Well, I mean, other people can make them. Look at, there's no other Jeffs. The best thing about my kids is they don't have these genes. They're not going to have to deal with the chub and the diabetes.
So, and your wife's primary purpose, mission, what she's doing with her life, is helping kids, not just the ones that you guys have fostered and adopted, but a lot of other kids through the foundation, right? So tell us about that.
Yeah, I mean, there's no question that my wife's number one goal is to serve the Lord and to serve our kids and serve the kids in need, and being a father. The Bible says be a father to the fatherless, but the community and being, the mother to these kids. And that's what she started the Fostering Foundation, which is a nonprofit that helps support children and families that are in the foster care system within Marion County and surrounding counties, Circuit 5. So, she pours everything that she has into it and making sure, because the biggest thing with foster parents is the amount of...
Well, there's probably a lot of bad ones, right?
Yeah.
A lot of good ones too, but there's probably a lot of...
it's, I would say 50-50 is probably accurate. Unfortunately, some kids come they get pulled from a bad situation and put into a worse situation in foster care. It all depends on the dynamics. Unfortunately, there's a lack of good homes. So probably why I keep ending up with more, because it's, we feel like God has put it on our heart to serve these kids, and we have been extremely blessed, and we have the space, and heck, I drive a 12-passenger van now, and my wife drives a 15-passenger van. So
we were joking on the way in here about that we were going to do like Instagram lifestyle shoots with Jeff's.
That's right.
Jeff's big cargo van that he drives around.
The life of a lender with 8 kids. But it's Amy. My wife Amy is just incredible, and how she does it, and it's amazing. But the support of our community has been amazing too. Having friends and people like you in our circle, it runs deep.
Well, you guys host a big event every year, a big fundraiser event for the foundation, right? Mm-hmm. Tell people how they can help with that mission, because that may be a mission that resonates with other people who may be listening.
Yeah.
As it does with some of your friends who choose to help with the cause. So
yeah, I mean, and that's one of the things, and that's why even the team name that I came up with for our lending team is True Foundation Lending, with powered by Planet Home Lending. But the True Foundation is a foundation not only through Christ but also through our home, right? And I've been so fortunate that I've never gone without. I was never had everything, but my parents gave us everything we needed to be set. And being able to help families and have that foundation is so important, like a home.
Yeah.
I'm
the same way, man. I had a great family, very middle class upbringing. Dad's a golf pro, mom's a teacher, so same thing. Always was able to eat. Always had clothes. Always had a home.
And being able to be a part of that, though, for other families, like whether you're an investor and you're renting to families that need that place, or whether mortgage banker like myself, helping to finance their first home or their next home, it's personally it's impactful. We're not just it's not always just numbers and closing deals or transactional. There's a lot that goes into it when you talk to these families, and whether you see an application come across and you see, oh my gosh, they've got 3 or 4 kids, and there's they're this age, and they've got they're different sets of circumstances. You start to really get into, I guess, the feels part of it.
Yeah, I'm sure.
And
I don't know how you couldn't, probably seeing the situation some of those kids come from.
Yeah, well, and that's one of,
I see it in my business too sometimes, where I'm like, you know, I feel bad the way some of these families are living with their kids in homes that we take care of, you know, and I push it every day with my team. Like our number one core value that's up everywhere in our offices is to treat every home like your own.
Yep.
You know, and that's what we want to do every day for every resident, every client. And we call tenants residents, and we call, you know, the industry calls them doors, units. We call them homes in our office for that reason, because I don't want my team thinking that, like, this is just another number on a computer screen, you know, or another work order that doesn't matter to get fixed, or...
Yeah, like, hey, we're taking care of the Miller family, you know, they're getting into this home, they're going to be set for the next 12 months or whatever it may be. You know, you're providing an opportunity for somebody to better their life. You know, and they could be coming out of a place that, you know, wasn't great. You know, and you know that because of the way you and your team interact with these families, and they treat it as their own, that they're moving into a place, or, you know, or whether they're investing or whether they're renting or whatever it may be, that family's going to be in a safe place and a good place.
Well, yeah, I mean, you know, even on the investor side, when we're helping investors operate their properties, that I still tell my team, that's, you know, like if you were investing with us, I would say, guys, this is Jeff's kids' college fund. These properties that he's investing in with us, and he's entrusting maybe millions of dollars of assets in some cases. Like, this is client A's future, right? This is their dream retirement. This is their kids' college education. It's not just like some other problem. It's something that matters to somebody.
Oh yeah, 100%. I mean, it's yeah, everybody invests for different reasons. You know, whether it's short-term, long-term gain, you know, generational wealth. You know, the real estate is a great opportunity and a great tool to build that wealth and to change. You could change, well, you could change for good or for bad. You know, making the wrong purchase, but
Sure.
that's where coming in with the right team makes a difference. Because, you know, if your investors are like, oh, hey, I'm going to build this in this area, you run your CMAs and your comps and you're looking at it and you're like, maybe that might not be the best bet. Let's try over here. Like, those are things that you guys look at, right?
Sure.
You know, it's the whole picture. It's not about
advising clients on what the smart investment choice is to accomplish whatever their goals might be.
Yeah, it's not just about closing a deal because it's there in front of you.
Yeah. That's the same thing.
Advising.
I know you and I are similar values when it comes to that, and similar belief system.
Yep.
So I think that, you know, what you guys are doing, both your business and the foundation with you and your wife and your family, it's a really awesome purpose to have in life.
Yeah, it's awesome.
And I know you're a man of faith, so I understand that drives some of that. And I think that it's exceptionally important, in my view, no matter what it is, that every human being finds something that matters to them and finds something that gives them purpose in life, gives them a reason to wake up in the morning, you know?
And what we do, you know, as foster parents and adoptive parents, we're not doing it for our faith, but our faith is what helps us get through. Like, because a lot of people will ask, I don't know how you do it. You know, that's so many kids.
I don't know how.
You know,
it sounds impossible.
And for some it is, but with God anything is possible, right? No, you know, it's you know, it's one of those things that our faith helps us understand the purpose in what we're doing in the season, not with just the idea of, hey, we're going to do this because this is what we feel is the right thing to do. I mean, is it the right thing to do? we feel like it is for us, but not everybody's built for it. But I think the faith aspect of it is why we're going through that every step that we take forward into foster care, he just keeps providing more and more. And it's like, it's the more you give back, the more you get back. And we don't give to get, but once you start doing it,
you kind of need to get a little bit more though to take care of all those kids once you do it.
Well,
so I mean, in this case, it's a great thing. That's the way the universe works, because
100%. I mean, it's been and that's what my wife will stare at me and she'll be like, I have no idea how you got into this position with mortgage banking and how you become successful. Success is defined in many different ways, but she is the most organized, on top of it, person I know. Whether it's event coordinating, whether it's getting the kids together, whether it's just, our kids go to a small private school to where they don't provide lunch. So Sunday afternoon, it's meal prep. It's 8 times 5. So there's 40 containers that we put together on Sunday afternoon to make sure that they eat way healthier than I eat.
I do that just for me, and it's a lot of work. So I understand. Meal
prep is a real thing. It's amazing to watch my wife work. I think God just gives me the opportunity to go to the office. It's like my office is like my like when I go to work, that's Daddy's vacation.
Yeah.
It's like,
that's why you're actually there at 10 o'clock at night, not because you're really working that hard. You're just escaping.
Yeah, no, I was there at 5:40 this morning. I got into Starbucks at 5:20, got my coffee into the office and just started working.
Well, I'm sure it's a nice break for her too to have only 8 kids instead of 9.
That's right. You know it, and that's what I tell everybody. I say, I joke around. I say, I have 8 kids and my wife has 9. I'm her 9th, and you picked up on it because I'm just one of the kids, and it's been an amazing ride. I can't wait to see what comes of it in the future. My oldest just turned 13 a couple weeks ago, so I'm in it right now. 4 girls, 4 boys, just bracing for impact.
Yeah,
because it's been really smooth.
And it's going to get even more expensive too as they start to go to, proms and start to play more sports cars, colleges, all of that stuff. So
yeah,
you got a lot of
prep.
Yep.
Yep. So,
you got to start selling some mortgages, man.
That's right. Yep. Yeah, and it's we get to finance the American dream. So
speaking of that. Mm-hmm. So you are, we really dove into the personal side of things, and if there's anybody out there who their project, what they're spending their lives working on resonates with, just reach out, DM, and I'll get you the information to make a donation. So,
for the foundation.
For the foundation, not for Jeff's kids.
Not for mortgage banking or my kids, but yeah.
Because they are helping other foster kids and adoption situations other than just the ones they're actually doing themselves. So,
yeah, we want to, our goal is to help all those that are kind of doing what we're doing. It's a huge undertaking to take on, because you get a call in the middle of the night and it's 1 o'clock in the morning, and you might not have a crib or diapers or wipes or or formula, and you have all of a sudden they're like, hey, we're gonna drop a 2-year-old off. Like, okay, well, usually they come with nothing or whatever clothes they're wearing, or maybe a plastic bag with some stuff. So that's where my wife comes in with the Fostering Foundation and making sure that those families, when they get that call, that they can have everything to the house either that night in the middle of the night or by the first thing in the morning. And that's what the foundation is all about, because there's a lot of times where people just feel like they're on an island. You can't talk about kids' cases and stuff like that. So, that's where, she really brings that community together and make sure that they have the support that they need to get through it. It takes a village. It takes a village to raise a child. Anybody that's had kids, whether it's parents or brothers or aunts and uncles, just stepping in for a minute just to go grab a bite to eat with your spouse. I mean, it really makes a big difference. So when you start adding multiple kids, it's even more important. So we've got a great community here.
Yeah, it's truly awesome what you guys are doing. It's you guys are better people than me. I know that.
God calls us to do all different things. It's I can't fix anything. I can't help anybody on the side of things that you do. You do a lot of great work and stuff. So it's mine is just in a different department. That's all. We're all shopping in the same store. We're all working in the same store. We're just trying to make the experience better for everybody.
So, in that vein, so this is something not everybody understands. In mortgage lending, there is kind of different products for different people, right? And different situations. And two that are commonly referred to in the industry would be like a secondary market mortgage, and then like a DSCR loan or like an in-house commercial product.
Yep.
So can you kind of explain the difference between those two things? Because the secondary market's usually like what your homeowner who's buying their first home or their dream home's using, right?
Yep.
And then the other is maybe more geared towards an investor. So
yeah, so you have so we're mortgage bankers. What we do is when a client's looking for a conventional mortgage, or that's what they fall into, typically it's going to be a Fannie Mae or Freddie Mac product, which are the major GSEs for the United States, which are government-sponsored entities, which they're the ones that buy mortgage-backed securities on the secondary market. That can get into a whole long wind of that, but then there's the portfolio products.
But essentially they're guaranteeing to a lender that some portion of that mortgage is going to get paid, and it's really an initiative to increase home ownership, right?
Yeah, so what happens is, we originate the loan, we sell the liability to Fannie or to Freddie, or in the event that it's an FHA loan, VA loan, or USDA, we sell that liability, that mortgage to Ginnie Mae on the secondary market. So then the lender, the bank, gets all that money up front, right, from selling that for that loan. Now, there are lenders like us that service the loans, so then there's service release premium to where those GSEs pay those lenders and those servicers to collect the payments monthly, right? So yes, that is technically an insured loan, like definitely with the government loans like FHA, VA, USDA, those are government insured, insured back loans. Then you roll into your non-QM stuff, or your portfolio. There's bank statement loans, there's DSCR, which is a debt service coverage ratio, meaning that the only thing we need is, one, we need a decent pay history, so credit is going to be an aspect. Then down payment, typically 20% or more. And this is, DSCR is directly for investment properties only. Then what we do is we get an appraisal and a rent schedule for the average rent for that property. And as long as that monthly average rent for that property, even without, we don't need a rental agreement. If that's the same or more than
just
what the
projection of what the
monthly
rent would be per month.
Yep.
And you could take
That's
a
it.
percentage of that and add it to that person's income to like make sure they can cover the debt service and they'll qualify for that loan, essentially.
Yeah, I mean that's the debt service is just purely whatever the rental income is versus we don't use any income for the buyer. It's purely whatever that average rent is for that property and whatever the mortgage payment is, and then the valuation of the.
What property types are you guys able to do for that type of product?
So we do all different types of products, whether it's condos, single-family homes. No manufactured homes fall under investment properties. Typically it's always going to be primary and second homes for those. They end up being investment properties sometimes down the line. But there's unique properties, horse farms, especially here in Ocala, it's a horse capital of the world, right? So, and that's where it's so important to have the right appraisers too, because understanding our market and WEC, World Equestrian Center is in the equine business makes up over 30% of the economy in Marion County.
It's the weirdest thing I've ever seen in my life coming here.
It doesn't make any sense.
The reason that we're here part of the time is because my wife's big into the horse world, and
Yep.
back where I am from and where I grew up, there's horses, but they're on farms, and they're not. Maybe they're used for like Western riding, like barrel racing or something, right? But here, this whole place is just built around it.
Yeah, I mean, Marion County and Ocala is it's built on horses, whether it's all the way, thoroughbred racing or the dressage and the hunter jumpers.
The English side, yeah, which is what my wife's into.
We are having, we have people coming from all over the world to Ocala, and investors, and they're realizing that there's something here. It's important for us on the lending side that we're able to help with those buyers that are looking to occupy those properties, or maybe buy them to then rent them out to these people that are coming in seasonally. And so having an appraiser that understands, hey, a 5-acre parcel with an 1,800 square foot home anywhere else is $500,000. Well, if it's 5 minutes from World Equestrian Center, you just turn that into $2 million. It's maybe it's not as drastic as that, but there's definitely a huge value.
Oh, it's crazy.
And
yeah.
so
the value's right around that area.
So,
but the rest of Ocala, which is really cool if you're somebody looking to relocate, I feel like it's extremely affordable.
Yep.
I mean, really, the values aren't that much different than they are in small town Kansas and Missouri, where I'm from.
And that's one of the things that we're seeing, especially in the Southwest corridor down by Marion Oaks and 484 and 75. We have clients that are now, they work and operate in Orlando, but they're buying in Southwest Ocala because it's more affordable for them to buy a house, live here, and to commute back and forth. And so that's
and they can you can buy a pretty nice new home here for under $300,000 in a lot of neighborhoods, right?
Yeah.
Which is hard to do in most places in the country anymore.
Yeah, I mean, I've closed a couple in the last couple months that were $205,000, and the builder was giving $7,500 in seller credit. Like, so the net was less than $200,000 for a brand new construction home. Now, it's simple, but it's 1,100 square foot, 1-car garage, 3.2 or 3.1 on a 1/4 acre lot.
But from the investor perspective too, that makes it an interesting market for long-term rentals, because the rents are actually not super cheap here relative to those purchase prices either.
Right.
So, I've seen homes like that rent for $1,700-$1,800 a month in this market.
Yeah.
Because I think there's a little bit of a shortage of long-term housing here. Maybe not apartments, but like single and small multifamily stuff that people want to live in and raise a family in.
Yep. I mean, I think the duplex and triplex and quadplex is something that we're going to see more of, especially in this market, because you can buy those with an FHA loan and live in one and then rent out. We can use the rental income for the other 2 units to help qualify, or other unit. And it's a great way to, because the cost of building doesn't double. Yeah, it's more because you've got 2 units, but
but you got some things like, obviously I'm building stuff all the time, and you've got certain things like just getting the utilities to the site and the site prep and some of the things that are going to happen whether you build one unit that's 1,200 square feet or you build 4 homes on one site that are each 1,000 square feet, right?
Yep.
And you still got to get electricity to it and plumbing to it, and there's some sort of fixed costs that don't translate across every square foot that you build.
Yeah.
And that's something I wanted to get into with you, because we've talked about this beforehand, that one way I always, when new investors come to me wanting to get into real estate investing, I'm a big proponent of house hacking, which not a lot of people do it. I think people are maybe like, they want their own space and their own home. My wife and I did it at the beginning, bought a duplex and lived in one side and rented out the other side. and you're basically living for free.
Right. And building equity.
Building equity, and a lot of the
You're getting paid to live there at the end of the day.
and a lot of the products that you guys have that we've already talked about work for that. And it's a way to get people into home ownership that maybe don't want to carry the weight of a $1,500 mortgage themselves every month, right? So like we talked about the secondary market mortgages. They'll do those on 1 to 4 family, won't they?
Yeah, and we can do them on 1 to 4 family, but also another big aspect is the ADUs, the accessory dwelling units, to where, especially with some of the large parcels that we see a main home and maybe a manufactured home, or maybe a smaller home or a barn apartment, we can use those we can use rental income from those apartments or those ADUs to help them qualify.
Well, like what our buddies, the Keidells, did with their little compound out there, right? They have like multiple little houses
Yep.
on this 10-acre parcel that they bought, and they've got multiple family members living in them and paying rent.
Yep.
And-
There's another 24 acres that they're getting ready to tack on that, so it'll be 34. I mean,
So they're kind of doing the whole house hacking thing.
Oh, 100%.
It's a little bit of a different way to do it than what I'm used to seeing people do it, but
yeah, I'm happy to live with my family in the same city, but we're not going to share property.
yeah.
So no,
I'm kind of
those guys are great.
Kind of with you on that one.
Yeah, their bond is super close. I mean, they're amazing family. We're very thankful to have the Keidells in our life, not only through golf but also through friendship. Those guys are amazing.
Well, somebody's got to bring cash to the
That's right.
course, right?
Well, now me and Scotty are doing the hat matches, right? So my hat collection is getting a lot better.
I'm sure they'll love this part when they see it.
Oh, I can't wait.
Yeah.
It'll be a laugh.
So, what about like? I think you'd mentioned that you guys have some products that are more for that could even be used for maybe commercial rental property or multifamily rental property.
Yeah, so here at Planet Home Lending, we have a commercial division to where if we have investors or builders, that sometimes builders want to cut out the investor part of it, right? To where they don't want to split the proceeds, especially in a tough market when you have two people trying to chase a dollar for a new construction. It makes it easier when there's one person involved. So not only on the fix and flip side, if they have a background or a portfolio and they're like, hey, I want to buy 1, 2, 3, 4 of these properties. You could do rehab, fix and flips. We'll fund it 24-month terms. Interest only that they're paying until they flip it and sell it. And then, or they're looking to do, brand new construction homes, ground up. Same terms, 24 months. It's
24 months interest only is really good. This is the kind of financing I'm operating with on almost every deal I do personally, and a lot of my clients are doing.
You've seen a lot of 12 and
a lot of 12-month. And I'm, usually I'm working with a lot of like local lenders, and they're usually able to like extend it if I need to or something.
Mm-hmm.
But 24 months interest only is incredible. And if you can get the deal done a lot quicker, which we typically do,
Mm-hmm.
That helps your cash flow. Get it done, get it rented, and for maybe a year or more after that project's complete, you're paying interest only, and you're keeping the difference in that rent that you're getting.
Yeah, I mean, if it's a $200,000, just rough numbers, $200,000, your maximum payment interest is going to be like $750 to $800 a month that you're going to carry over from month to month. Well, if you've got to borrow, if you've got somebody else that's working with you on it, to where, as an investor, having basically two investors on the same deal, if you can become the only investor and double your profit, because the profit margin doesn't change for the cost is the same to build it. If it's 40,000 and before you're used to taking 20, well, now you can hold on to that a little bit longer, or get the price, and then even if it sits for another 2-3 months, you're still making 180% instead of instead of the 200%. But
Yeah, I think that's a great product for investors because a lot of the best deals have some sort of construction to them, right? People are buying them because they got some operational distress or some deferred maintenance or something that needs to be addressed to fix it to make it work the way it should work, right? And that's where the money's made in real estate investing, typically solving a problem with property.
And one of the big things is having, we'll use 100% of the land value. So if you have investors that own lots, we can use that as 100%
collateral for it.
Yeah. So
Yeah.
say
So
it's
instead of like putting cash in as a down payment, you use the land.
Yep.
Yeah.
And so a lot of different banks and lenders aren't utilizing that, or they're utilizing 50% of the value instead of 100%. It's just kind of like a safety aspect, for the lending side, because the lending is all risk based, right? It's all in the event that
Sure.
it
You
all
don't pay, even though what only 1% of mortgages actually ever typically go bad.
Yeah.
But still, that's the whole game is.
Yep, keeping everybody out of default. And that's
Yeah.
the other thing is like, people think, not people, but sometimes we get the thought process that like, oh, well, I have X amount of dollars in my account, why do you want to know, like, you're going to need that towards the transaction. That's not the case. Our goal is to always least amount of money out of pocket for our clients, but also in the event of default, the last thing that lenders want to be is in the real estate business. They don't want to own property.
No, I know. I've had banks that basically they'll take a property back and they'll call me and say, how do you get me out of this, right? Or they'll have me manage it for them in receivership and then like collect the rents and exercise their assignment of rents clause and then hire me to make sure they actually get paid on it, right?
Yep. Or and even before it
default.
gets to that point is we want our clients to stay in their homes. It takes a lot to get to foreclosure. Unfortunately things happen, unforeseen circumstances. But our goal is to always, with our servicing team and our servicing department, is to figure out what we can do to keep that family in that house.
Sure.
Whether it's a modification, whether it's helping them facilitate the quick sale, or pushing payments back to where they can actually survive, to where they can actually move into another rental if they have to foreclose. We're still human beings, right?
Yeah.
It's no eviction tickets.
Well, we have to evict people,
Mm-hmm.
and it's not something I enjoy.
No.
It's just something that we have to do for our clients to be successful. So prefer not to do it. Try to work with them to not do it, but
Always trying to figure out a game plan to not do it. Yeah. I
for sure, it costs everybody money, and it hurts the person that it's happening to really badly.
Yep.
And I know they don't want it. Nobody wants it to happen. Nobody
No.
wants to get evicted. Nobody wants to get foreclosed on. So, so let's shift back a little bit to the positive side of this.
Yep.
So we were talking about that construction line product, which I find really interesting. So let's say I just bought a piece of land and I used your construction line product. I got 24 months no interest. I'm at the end of that period. I've got a fourplex built on this property, and I want to do permanent financing on it, like an FHA loan or a conventional secondary market mortgage on it. What do terms look like today, typically for that? Like what's the interest rate on a 15-year versus a 30-year? What amortization period can they typically get?
So, it really depends if it's going to be utilized as a primary residence or an investment or second home. If it's a second home, if it was built to sell and you didn't sell it, and sometimes people decide, I couldn't sell it, I'm going to live in it, I'm going to make it my primary. We refinance that loan into a normal 30-year fixed. Whether it's if it's conventional or if it's FHA. Typically right now we're seeing, as of today, is like 6.125 on a 30-year fixed. Right before everything started happening overseas, we were below the 6% mark. We were close
For the first time in a long time.
Yep,
For a couple years.
5.875 on conventional, 5.625 on FHA and VA, 5.5 on some VA loans, which is a really healthy market. That's great for everybody. You
And I
know,
think that was big. That had the market moving a little bit more than what I see it even doing now since the, not to get into politics, but since the Iran thing.
Yeah, I mean, it drives so much of it,
Yeah.
But you also asked about 15 years versus 20 and 30s, and because of what's happened over the last years, with everything in the economy, there's been so much market compression. So what that means is there hasn't been a huge benefit for the secondary market, especially, to offer a much better rate for a 15 or 20-year term than a 30-year term, because of the fact that they understand that the market is getting better, or has been getting better. So the event that loan is going to get refinanced is probably pretty high. So with that market compression, not only do you see it in rates to where, the cost of a 6% rate, in order to save, 0.5% in rate, it could cost you 2 points because there's so much compression. Whereas when the market was like wide open in 19 and 20 and rates were low and the compression was lifted, you could go from a 3.5% rate to a 3% rate for maybe 1 point instead of it being 2 points. Points being 1% of the loan amount. So
Yeah.
$300,000.
So that's like your upfront loan origination charge that you're going to pay in addition to, and that's why. So you can probably explain this better than me, but those fees you pay on the front get calculated into like the total that you pay, and that's.
Yep. And that's one of the things that we do with all of our clients is we explain, or we try to explain the best we can. People get so rate focused, right? They're like, oh, they're offering 5.99. Well, your closing costs are $10,000 higher for that rate than with us, and say we're at 6.25, just throwing numbers. So people get so rate focused, and our job as mortgage bankers is to show them the difference, right? So, all right, you're paying 2 points to save a 0.25% rate. All right, well, on a $300,000 loan with $6,000, you're saving yourself $75 a month. Your break even is 90 months down the road, and you're most likely going to refinance that. So keep the cash, use the higher rate, have a little higher payment, and then expect to refinance in the next 3 to 4 years, or 2 years or 1 year, depending on what the market does. It just doesn't make sense to spend that money now.
Well, and the average person moves every like 7.2 years, isn't
Yep.
that right?
Yep.
So it's like they might even sell that home before that break-even point hits.
And the biggest, where we see that benefit pay off is typically in our retirement communities. 55 and older, you get an older couple, maybe they're in their 70s, there's a fear of a loss of an income if somebody passes, right? So buying that rate down, spending that money now to lower that payment to where it makes sense for them,
Yeah.
it might make sense. If it means pushing it down or doing a temporary buy down to where that payment is at a number that they can survive on a single income if anything happens. So everybody's, I think that's why I love what we do, and I'm sure that's why you love what you do. No two are the same.
Well, if that retired couple you just talked about had been working with me for about a decade before then,
Right.
They wouldn't be worried about income every month,
Right.
and they also probably wouldn't need a mortgage for that house.
That's right.
So, I'm more on the other side of is preventing that situation where they even.
Yeah.
At that age, if you're working with me for a decade plus, you're probably going to have enough money, enough income coming in from your real estate portfolio. You don't even need a mortgage anymore. Sorry, Jeff. I'm going to work you right out of a loan.
No, you're good. But I also have a rebuttal for that one because because
You might want to keep the mortgage so you can deploy the cash into more investments that make you more income, right?
well, and that's the thing. If you leverage your primary residence, you can write off your mortgage interest at the end of every year against your taxable income if you itemize, depending on how much interest you're paying.
Well, I have mortgages on both of my home here and my home in Missouri.
Yeah. So you can write it. You can write that interest off against your income. And the perfect example, I have a client that right now is shopping for a $1.5 million home with a VA loan, which is 100% financing, no money down. He's at 5.875. I think that's where we're at on VA 30-year fix as of yesterday. But he has Social Security and pension income, but his debt ratios. Now, VA is one of those loan products that is its own thing. It has the lowest default rate of any mortgage in the United States. Discipline typically follows with our military.
Yeah.
But
well, plus they all have, generally if they're career, they have steady income
and that's a
not that they make a ton of money, but they're.
And it all depends on what they did and where they're at. But because this particular client has 3.2 million in assets, they can purchase a home, even though there isn't an asset depletion for VA. It takes into the calculation that even though that their monthly payment is 73% of their total income. Now that's 73% gross, and then 84% on the back end debt ratio, and it's approved eligible, and they're able to buy it, even though we can't verify enough income to keep it below 50%, which is your typical, but VA allows for that. So, that's one of the things we look for, and finding ways to help our clients obtain. Every product is so different. Even on the conventional side, Freddie Mac, which is a conventional loan product. If you have, $1 million in an asset in a retirement account, without even needing a disbursement letter, we can take that number, divide it by 240, and use that as income. Fannie Mae only allows it if you divide it by 360, which is the term of the loan, so you get a smaller. So that's the difference of where we would maybe go Freddie Mac over Fannie Mae in the conventional mortgage bank. But then also student loans are calculated differently that are in deferment for each of those products. But
so speaking of those kind of unique sort of situations, something else that I know we wanted to get to was how you guys are able to get creative with business owners and entrepreneurs, because a lot of my friends and my audience and my clients are in that situation where there's when you run a business, there's a million tax deductions that you can legally take, right?
Yeah.
And not all lenders understand that well. Not all lenders adjust properly for some of those add backs that they should have to their income. Tell me about what you can do for that crowd.
So we have a couple different products. If we're standard, conventional Freddie and Fannie. Freddie, if you've owned a business for more than 5 years, then you only need the most recent year of tax returns for that client. Fannie requires typically in the 5th year 2 years average. So that's where if you have somebody that just say they made a net 50,000 in 24, and then 25 they made a net 200,000. We're not using $200,000. We're having to average the two for Fannie. Whereas Freddie Mac, we can just flush out the previous year and just use that most current year. Now, when it comes to the real creative loans, DSCR is obviously one of them on the investment side, but you also have bank statement loans. If you own 100% of the business, or even if it's you and husband and wife, as long as you're both on the loan, the people that are on the loan have 100% ownership of that business. We calculate all the deposits, and we use 50% of that as qualifying income for that individual. So they could show a net zero on their tax return, so they don't have to pay a bunch of money to the man, to Uncle Sam.
Yeah. Which I know you and I are both aligned. We'd prefer not to if we can avoid it.
Yeah. Well, I'm a W-2 employee.
Yeah, you can't really avoid it, can you?
I can't. They take it out every week, every 2 paychecks, or every paycheck.
Man, that's one of the beautiful things about real estate, though, is when you're a real estate investor, especially if you're a real estate professional, the tax benefits are unreal. The things you can do that are actually part of the tax code that you're totally allowed to do. You're not having to do anything shady, and you can pay way less percentage of your income on taxes than
the big beautiful bill, like our buddy
bonus
Jose.
Depreciation.
Yeah. and our buddy Jose that bought that big fancy truck, you know.
Yeah, but that's bonus depreciation too, but you can do that same thing with real estate.
Yep. And you know, you could depreciate 100% of it, you know, in the first year, even if you have a payment on it. So, you know, you buy a $100,000 truck and you made, you know, $200,000, you know, and you have to pay, say, 27%, you know, that gets added back in to where it basically nets out, not having to pay any taxes.
Cost him really no cash probably, because he went and got if he got a loan on it. I don't know whether he did or not, but, you know, then you claim bonus depreciation on your taxes and you save 30 grand in taxes.
Yep. It's, you know, and that's important too, is, you know, because I get that a lot too on the lending side, especially towards the end of the year. But also with, you know, like you say, like your high net worth clients, you know, I have clients that could pay cash for houses all day long, but they leverage their primary, even at 6%. They can make 8 to 10% in the market,
Sure.
you know, with that money, and then they have the write-off benefit on top of it. So,
Smartly using leverage is a big part of being a successful real estate investor.
yeah, and having a good CPA. you
Yeah,
know. I
for
think
sure.
that's where, you know,
That's somebody I need to find to have on, is a really good, like, real estate specific CPA.
I'm sure we could find somebody for you for sure.
Yeah.
Because and I don't know if it varies state to state. You know, especially with, you know, we don't have any state income tax here in Florida,
Which is amazing.
which is
Which
nice.
I'm about to be a Florida resident, by the way.
Congratulations!
Since
Welcome to the family.
Since I've went, I'm going to be here more than 6 months in 2026. I've got car registered, getting the driver's license.
Better friends down here.
And I'm gonna, I don't know about that.
You must make more money on the golf course with us than your friends in out west.
You guys are better targets for gambling. Yeah.
I knew that was happening. Believe me, I make myself wide open to that one. 100%.
So, before we wrap up, is there anything else that you feel like is really important that people hear from you about buying a home, building a home, getting a mortgage in general? What else do you want the audience to know about what we've been talking about today?
So, my biggest thing is, it is so important to have a trusted real estate professional in your corner, and also a lender that understands that area and that market. And I'm not just saying it to work with me in Florida. I'm saying if you're working with a real estate professional to purchase something, and they say, hey, this is my preferred lender, they're local, they're great, 9 times out of 10, that's your best option. Because now, it could, you know, if you already live here and you've got somebody at your bank or you've worked with them before, and it's fine. But, you know, there's so many fly-by-nights where people, you know, it's having that person there that you know that will make sure that the transaction closes. You know,
my wife was actually at a boarding barn with her horses here, and the lady wanted to sell, and she wanted to talk to me about selling it, and I was like, you know, that's not really my thing. Like, there's probably somebody better to help you with that than me. But if you wanted to, like, invest in real estate and build a portfolio and, you know, have that be relatively passive process for you, I'd be a great person for you to talk to. But selling a horse farm in Ocala, Florida, there's probably somebody with better expertise, local knowledge, right? Like, I am a licensed real estate broker, so I could do it. But
yeah, I mean, and
that just speaks to what you're saying, right?
Yeah, well, and it's, you know, you need somebody that's going to be there to tell you what you need to hear, not what you want to hear too, because it works both ways. You know, whether you want to sell your house for $260,000, and you know you get somebody that sends you and says, hey, it's, you know, you're looking between $215 and $230. if you go ahead and list with somebody else and it's sitting on the market just because they said that they were going to, they gave you what you wanted to hear.
Yeah. Buying a listing. I say that to people all the time. I say do not buy listings. I've got some agents that work for me too back in Kansas, Missouri, Arkansas, and I say, you guys should not be wasting your time buying listings.
Right. Whether it's reducing commission up front or anything like that, if they're willing to reduce their commission to sell your property right out the gate, chances are they're willing to do it with the person that's coming to buy your place.
Not very good negotiator.
Right. You're right. Exactly. I mean, if you were able to negotiate them down, then why are they selling it for you? And that's not always the case, but,
Which I will say I've reduced it. Like, when I'm working in investment properties, a lot of times you get into a situation on a negotiation where...
But it happens at transaction.
Yeah. So, like, these two investors they're a little bit apart on the deal, right? But they're close, and a lot of times investors, it's all about the numbers. It's all about what return on investment am I going to make when I sell this. And I'll say, well, instead of taking a 5% commission on this $1 million transaction, and it's like, to me, and I say this to you, and that $1 million multifamily deal or $2 million multifamily deal that I'm working on, it's not that much more difficult than like just selling a $200,000 house.
Right.
So I don't necessarily need to make 50 grand on it every time. I want to, and I'm not just going to give it away for no reason. But if it's something that makes the deal work for everybody and it's a win-win-win for them and me, I've done it.
Yeah. Oh, and that's 100% transactional. You're in the moment. You've got people that are invested and looking at the market or looking at the property, and you're coming to a deal. I think my thing was just more before it's even hit the market, trying to negotiate what it's.
Well, we've been having this conversation internally in the group chat that we don't the discount broker thing.
That's right.
Yeah. Are there discount lenders too? Our other friend's going to love it when he hears this episode too now.
There are discount lenders. There's a lot of lenders out there that we all have good intentions, right? And I think it's easier to work with somebody that's in it every day and dealing with the situations every day and the different types of loans, because I do so much different lending too in our team that it's not a surprise if something comes up or there's a scenario. I do have a lot of realtors and agents that will call me, and I tell them, I say, use us as a resource, right? And 9 times out of 10, I'm telling them, yeah, that's right. They're asking for the right things. You're not crazy. Like, I'm building the confidence in what the other lenders doing or asking for. I'm not there to, try to beat them down or say, oh yeah, they shouldn't be doing that. They shouldn't be asking for this. The thing is, as lenders, we don't want to ask for paperwork or additional things if we don't absolutely need it for the transaction. So, like, we want to get to the closing table as quickly as possible as everybody else.
Yeah.
We're 100% commission. All that work we did up until that point, if it doesn't close, it was just a waste of time.
For free.
Yeah. It's, so
us in the real estate game all do work for free all the time.
And you know what? Yeah. The bigger deals for me are the easier ones. You know, $1 million purchase, they have their stuff together. They got their W-2s, their tax return. Their money's all in the same place. They're not buying and changing the scores.
Or getting a gift from a family member to close the deal, or whatever it is.
The smaller the deal, the tougher it gets. Typically, but. That being said, that's somewhere where the best feel-good moments come out of.
Absolutely,
right?
Those first-time buyers and
the tears at the closing. Yeah. Oh my gosh, we had one, a couple months ago that they got turned down by 3 other lenders, and it was just a matter of doing a manual underwrite and understanding the guidelines and calculating income correctly to the guidelines. We don't have any overlays, so it makes it easy. So if like FHA says this, VA says this, conventional Fannie Freddie, boom, there's no...
That's great, because I see a lot of other banks and lenders that they make up their own rules. So like you just go straight with like the FHA, Fannie Freddie, minimum credit scores, debt to income ratios.
Yep. If it's a US rule, or even if it's refer, you've got...
That's awesome.
You've got manual underwriting. to where, I've got one right now that we got under contract on Sunday. They're buying a $235,000 manufactured home. It's refer eligible, meaning that we don't have a AUS approval, but I ran it through underwriting to get a TBD approval. Their ratios are low enough, 31 and 41. And they have, all they need is 1 month reserve, which they have, plus them.
Yeah.
And they're using down payment assistance. So there's products that we have that we can, I told them they had the money for the down payment, but we're utilizing the down payment assistance, even though it's a small payment for the $8,200 that they're borrowing. But they can take that $8,000 and pay off revolving debt that they have. That's at 25 and 30%. That's what we look at the whole picture. Because again, that's a second mortgage. Yes, it adds to the payment a little bit, but that $100 a month is a lot better than the $200 a month you're paying just in interest to a credit card that's not getting paid down.
Yeah.
And a lot of those people don't have the discipline to take, so basically it's like, hey, this is what you're going to do. You're going to use that money to pay this off, and we're going to help you in that instance.
Yeah.
And then also you're going to be paying it, and then you get that interest against your taxable income, even on first and second mortgages on your primary. It doesn't matter how many mortgages you have on your property. Yeah. That interest is tax deductible.
So I think that's a great final message that you just gave to everybody listening. Always hire a professional.
Always.
Whether that's real estate agent or broker, mortgage lender,
yep.
Home inspector, contractor, right? All these people who service housing out there in the world.
Yep.
Hire somebody who knows how to do it.
Yep. Do your homework.
If you're getting a mortgage loan, call somebody like Jeff
or just call me.
That understands it and can get creative and figure out how to help you get your deal done, because that's what we all want.
At the end of the day, we want everybody to be happy, and there's nothing. Yeah. Nobody's more happier than everybody once everything closes.
Yeah.
Right? And sometimes it seems like they're pulling teeth, and our business is so federally regulated. Anytime the government gets involved in anything,
yeah,
it's always tougher.
It sucks.
It is what it is. There's things that we have to do and compliance that we have to follow, whether it's appraisal ordering, whether it's lending and disclosures. Anytime something changes, it has to be disclosed. We don't want to keep sending out stuff.
Yeah.
We have to follow the rules. But at the end that's where all the smiles happen. That's where we get the gratification out of what we do. We help get it to the finish line.
I always love it when I get a client a big win.
Mm-hmm.
It's the best feeling in business,
Oh yeah.
So if you're looking at buying a home or doing an investment property, I think Jeff would be a great guy to reach out to. And Jeff, thanks for taking the time to come on today and talk to me.
Thanks for having me.
I know we talk all the time about a lot of things, but not necessarily business things all the time, even though we are in a similar line of work. So it was good to get to touch on that a little bit more with you today.
Yeah, and help me get more of a kind of an eyesight into what you're doing, and more appreciation. I think not only as friends, but as I was going to wear my robe today for the member guest championship.
So just so everybody out there understands, Jeff and Steve beat me and my partner in the tradition, which is our member guest at Golden Ocala. We finished second overall in the tournament. They finished first. They get a robe. So he had to bring that up and brag a little bit.
Just for Steve and others. But hey, man, I really appreciate it.
That was fun, dude.
Yeah.
Yeah.
Appreciate you.
Thank you.
Thank you.